To let you know, trend signals flipped today, or the majority of them turned bearish, and the momentum signals turned bearish today as well. We could just keep going lower, a 50 or towards horizontal support, getting any kind of meaningful bounce. This is the NASDAQ daily. Still possible we attempt to fill the gaps, or a couple of them. Monday's gap, if we do, we could still get back-to-back reversal bars in the weekly time frame, out confirming our topping tails from last week, getting validation in the daily time frame with these signals here. If we attempt to fill the gaps, no guarantee we do, no requirement that we do, but we could. Do we continue to sell off head and shoulders, or do we try to fill the gaps first? We'll be watching. Signals turning bearish, the door is open now to continue lower. Just saying, we have those gaps to be watching, holding below our 10 period. Now we're breaking the 20 period, so we're doing technical damage. NASDAQ daily here, giving us a red awesome oscillator bar in the weekly. Stochastics rolling over in the weekly, forming that divergence. The weekly for the NASDAQ, here's the weekly for the S&P. Again, you got your red awesome oscillator bar. We're going to need to flip these weekly charts and come take out the 10-week moving averages for a bigger drop. But eventually, I think you're going back to the April lows, as I've said. And I think we'll be there by January. Next 10 to 14 weeks. S&P, bearish reversal of conditions with momentum. Agreement with the trending signals turning bearish. So again, do we come down and just move towards 65.50, the neckline for the head and shoulders pattern, and eventually try to bounce there? Or do we attempt a recovery to try to fill Monday's gap or today's gap on a closing basis? We'll be watching. Stock market crash is now in progress. It is being validated by the daily signals, momentum, and trending signals turning bearish. S&P daily here. Some green awesome oscillator bars. Maybe you get a recovery to try to fill these gaps. But again, as I've said, the hanging man candlestick got confirmation, a follow through, likely seeing the top day of the Fed. And I told you, that day, I believe that we've topped. Still believe that. And again, the VIX warning, something's about to happen. We're holding above that 50. Now we're trying to get back above the 200 period. The MACD's firmed up now here at the center line. Stochastics turned back up. The MACD getting a bullish cross today on the VIX in the daily time frame. I wouldn't ignore what's going on. We're about to see a massive crash in the stock market back towards the April lows. A bigger drop than what we had at the beginning of the year in February of 21%. You're going to see a bigger crash than that. It's already started, in my opinion, with major resistance. Okay, having to make another video in bed. Recovering from emergency surgery. I made the video and probably too close to the mic yesterday. I'm trying to back it up a little bit today, and usually I have my microphone set up at my desk so I don't have an issue, but anyways, I'll try not to be too close to the mic today. If the sound wasn't the best yesterday, I apologize. Interesting charts to share with you. Try to be shorter. I went in depth a little bit because I had skipped a day, got really sick, went to the hospital and had a bazillion tests. Ended up I needed to get emergency surgery, so recovering from that. But thank you for your patience with me. The Dow dropped by nearly 400 points, down 0.84. We have the AI sell-off. We're witnessing the bursting of the AI bubble, and people don't realize it yet, but the AI bubble is bursting, and the stock market has peaked, in my opinion, at major resistance that I've shown you in the weekly and the monthly time frame. The S&P was down nearly 76 points, down 1.12%. The NASDAQ was down nearly 2%, 1 point. This is NASDAQ Composite, 1.90%. The Russell was down 1.86%, and the VIX surged by 8.27%. Again, I warned you that the VIX was warning that the AI sell-off was coming. Nvidia is down 7.12% for the week. Again, I told you Nvidia overthrew resistance in the weekly time frame, and we're hitting this upper boundary of the broadening formation. If we exclude the shadow here, connect it, you're slamming up into this level, you're turning down, you've got this massive negative divergence. This is a Class B divergence where you have price going higher. You have two equal peaks there on the RSI. You have a massive divergence, Class A divergence on the MACD. Class A divergence on the histogram, and when it goes negative, the MACD here is going to roll over. Maybe that happens this week or next week. Formation has formed on Nvidia. The broadening formation has formed on the NASDAQ. This is warning with the completion of the broadening formation that the AI bubble is now bursting. In the early stages of the collapse, but the AI bubble is bursting. Now, just quickly, the larger channel, again, I've drawn this back with all the data that we have for Nvidia. Had this trend line for several years, and we slightly breached it, and that's what we did right here. And it ended up turning back up, and you got this massive move higher. Now you're likely headed back down to the lower end of the channel, likely into late 2026 or somewhere in the first half of 2027. The AI bubble is bursting, and again, I've talked about this trend line. You're just slightly overthrowing it like you did over here, and then you're going to turn. We had an overthrow move, just like we did back at that bottom. We began to take off. We had an overthrow move here. But we're still forming this massive broadening formation in the daily and the weekly time frame. And again, if you exclude the shadow, you got a really nice trend line there. And we're likely headed back down to test the April lows. NASDAQ 100 for Nvidia, for Bitcoin, for the S&P 500. Broadening formation for Nvidia. You got the broadening formation for NASDAQ. Bitcoin's forming a massive head and shoulders, and so is the S&P likely to form a massive head and shoulders. Head back towards those April lows, and I think we'll be down there by January when I think the Fed panics. The emergency meeting for the emergency rate cuts. I think the Fed is going to end up going 0.5% or 0.75%, and I think it'll more likely be 0.5%. In my hospital bed last night, I had a hard time sleeping, so I took the time to write down some thoughts about the coming regional banking crisis. I'll touch on it briefly, but you can go read it over on X, formerly Twitter, x.com, Charting Prodigy, and I posted this. Just wrote, the regional banking crisis that I've been warning is coming is now starting. You just don't know it yet. In its very early stages, and you're going to begin to see it escalate over the next 3 months during November, December, and January. By January, the Fed's going to panic, and you're going to be getting jumbo cuts, in my personal opinion. Might be by late December, but I think by January, more likely. The Fed is injecting billions of dollars into the banks. Late October, early November here. They're doing that as a precautionary and defensive action intended to prevent a financial instability and a broader crisis happening. People aren't paying attention. It was in direct response to tightening of liquidity in money markets as bank reserves had dropped to a 4-year low. And I wrote down, why is the Fed doing this? Why are they injecting billions of dollars in the banks, the largest injection in 5 years? Why? Wrote down a few thoughts here. And again, one, I've been talking about the regional banks' exposure to the commercial real estate sector and those loans. By the way, they also have investments that are underwater. Actually, again, you're going to see a lot of these banks go belly up. We're in a liquidity crunch. Quantitative tightening and the large treasury debt insurance is draining cash from the banking system. Seeing repo market stress. Shortage of reserves is pushing up overnight repo rates. Significant injection of money was needed to prevent a freeze in these crucial short-term funding markets. Then I talk about the emergency intervention by the Fed injecting cash. They're trying to provide the banks with liquidity to meet their daily needs, trying to prevent a bigger shock. And I talked about how the Fed just announced the end of quantitative tightening. And again, the Fed beginning to cut rates. September, now announcing after starting rate cuts. I'm sorry, I'm just a little tired. I had a hard time sleeping yesterday in the hospital. That was good. I had time to write all this out and think things through a little bit. The Fed is pivoting in that, moving into ending quantitative tightening. In fact, that the Fed has started cutting rates, and the Fed is now ending QT. Huge warning signs. Now, say this, I'm looking on the internet, looking on social media, and I see people all over the place going, oh, the Fed starting QE with oh, this is wonderful. These people are oblivious to what's going on, okay? The Fed is injecting money into the banks because we're about to have a banking crisis. They're panicking and they're trying to take a defensive posture, as I wrote up here, and prevent potential financial instability and a broader crisis from happening. They're not going to be successful. The Fed did this during the financial crisis, and it ended up taking a whole lot more money than they thought, hundreds of billions of dollars. And then after they tried to stabilize the banks and the financial system, and we've had rounds of QE. Just realize, again, this going on here, this is so bullish. That's what I keep seeing all over the place. This is so bullish. The Fed is starting QE. Not starting QE, they're injecting money into the banks because the banking system is in dire straits. That's what's going on right here. People that are running around saying this is QE and how bullish it is, they're oblivious to that we're about to have a massive financial banking crisis. That's up on X, and you can go to at Charting Prodigy. You can review that for yourself, but I just wanted to briefly touch on that. Fed thinks they're going to stabilize things, and that's the end of it, and it's over. Crisis is just getting started. AI bubble is popping, the recession is coming, and the banking crisis is beginning. And as I talked about yesterday, we're now beginning to see the early stages of stress in the credit markets. When we look at the spread between the junk and the top-notch quality, again, you're seeing the warning signs with the stress in the credit markets. Hearing more about this banking stuff in November, December, and January. It's coming. We're going to hear more of banks having problems, and eventually, later in the recession, this is going to lead to a black swan event. It will be associated just as the subprime mortgage crisis was associated with the decline in 2007. I told you going into the Fed meeting, be looking. We broke on the 24th, the Friday ahead of the Fed meeting. We broke to a new high above the October 9th peak on the S&P. I told you to be watching for a top that week of the Fed. That's what happened back in 2007. Sell-off with the Fed October cut in 2007 being associated with the top of a sell-off. And I told you we were likely going to see the same thing. That's happened, and that gave us this topping tail. We peaked the very day of the Fed announcement. Got a cut from the Fed, and then Powell tried to cancel the December cut. He's not going to be successful in canceling the cut. Going to get a December cut, and eventually in December or January, the Fed will panic, and you'll start getting jumbo cuts. The herd believes they're bullish, they're bearish. Be associated with the coming recession, the crisis that's about to happen, the banking crisis, and the market is going to begin to price all of this in and begin to kick off the bear market with a crash of greater than 20%. And that's why I say we're going back to the April lows. The stock market has peaked. Bitcoin has peaked, Nvidia has peaked, and people are blind to it. The same experts that told us there was nothing to worry about just before the 2022 sell-off, same people saying the same stuff right now. Time it's not going to be a major correction. You're going to enter a bear market that's going to end up being uglier than that sell-off. That was 27.5% for S&P, 37.5% for NASDAQ, 8% for Bitcoin. Bitcoin's going to end up dropping 80 to 90%. Nvidia is going to drop 80 to 90%, seeing the beginning of the bursting of the AI bubble right now. Told you I expected a confirmation of this candlestick. I told you if I was wrong, that we could get back-to-back candlesticks. Get a rally back up before the weekend, you still may get it in a hanging man type of a candlestick. Right now, we're now confirming this candlestick in the daily time frame. I told you to be watching for confirmation of this topping tail, of this gravestone doji, with the weekly bar here and with my daily trending signals turning back to bearish. We are now seeing that happen today. The stock market crash is likely now in progress. We need a close below this level and then eventually a follow-through to take us below the 10-week moving average, which has been acting as support during the run-up off of the April low. Weekly chart of the S&P. What is confirming this candle is this candle that we're getting right here. It closes down sharply lower by Friday. With the S&P dropping more than 1% today, now I'm seeing my trending signals begin to validate the topping tail in the weekly time frame. This is what I told you was needed to begin a larger crash. I believe we're eventually going down to the April low in the next couple months here, the next 10 to 14 weeks or so into January. I think you'll be down here 26 to 30%, maybe even more, lower, a bigger drop than what we had over here of 21%. But we're seeing the signal flip back to bearish. Now, we could just continue moving and getting a sharp decline, not get any kind of recovery back up to try to fill the gaps. But with the signal turning bearish, the other possibility is that it remains bearish here now that we've turned bearish, and you turn back up, but the signal still remains bearish. You can rally back up and fill some of these gaps, still have the signal bearish, and then still see the decline. So you can get this recovery. So I'll be watching to see if we do get a recovery before the end of the week. The signals are now bearish. Even if we recover, we may attempt rebound back up in that weekly bar and may not confirm end of the week. May do it after attempting maybe to fill a gap or two. That is still possible. But again, the crash has already started, and it's now being validated with my signals, which are correct, turning back to bearish. We needed to see that happen, and then either this week or next week we'll need to confirm that gravestone doji in the weekly time frame. But that topping tail is being validated with my signals turning bearish. My swing trend signals here in the daily time frame. Stock market crash is now in progress, even if we rally back up to try to fill a gap or two. So the S&P, we can get a follow through to today's move and then rebound back up as we start to drop here with the cloud, or we may just attempt to rebound back up. But again, eventually the cloud is going to start dropping. You can still get a rebound back up to attempt to fill Monday's gap. You'll have the signals bearish. If you do, you might end up with hanging man candlestick in the weekly time frame and still get your back-to-back candlesticks, but have the peak in with a lower high. You have to rebound back up. Listen carefully. We don't have to, but I'm just telling you, if we do, you can get a rally back up, and the signals, now that they've turned bearish, can remain bearish. With them turning bearish, we could just continue the decline. We'll be watching, but the signals are validating the topping tail in the weekly time frame. Now, when we topped in February, there was really no pullback whatsoever, and we just started sliding, and we dropped 21%. When we bottomed out, the signals turned bullish. We did get a pullback, establish a higher low. So could we do that here? Maybe. But again, you don't have to pull back to fill those gaps, but I'm just warning, we could. The fact that signals are turning bearish is a good confirmation that the topping tail, so this is really confirmation that that topping tail is a really good shot of being the top. And again, we slammed up into that resistance in the weekly time frame. And that's why I told you I thought we would be peaking the week of the Fed. And I told you likely see it the day before of the Fed or the day of the Fed. I told you on the 28th we had a shot at it. I told you on the 29th I thought that was the top. And that reversal bar is now being validated in the weekly time frame here, in the daily time frame. The trending signals turning bearish. Same is true for the NASDAQ. Again, we got the gaps. We might go back and try to fill the gap. We'll see what happens. We don't have to fill the gap, but we might do it. Gap down sharply there on Monday, as you can see here in the daily time frame. But again, NASDAQ validating the topping tail, the shooting star in the weekly time frame. We'd likely see something like this where we turn positive at the February top, and then we quickly turn back to bearish. Again, here, you just turned and you began to sell off. Here, you had a reversal, and then you got a pullback. So which will this be? Regardless, I expect the signals are to remain bearish. I expect in November, we're going down sharply, November, December, on into likely January. I think over the next, again, as I've said, from last week when we peaked, told you last week when we topped, thought that was a top and we were going to sell off for the next 10 to 14 weeks. Historically, that is what we have done, kicking off the bear markets. Just quickly, trending signals validating it here for the NASDAQ, turning bearish. S&P right here. Now, at some point we'll get a bounce. Now, whether that's immediate, whether we go lower before we get it, at some point we're going to get a bounce. And the people that told us a sell-off wasn't going to happen told us there's no risk with the AI bubble. I'm going to proclaim over and we'll get some kind of counter trend at some point, whether we fill the gap immediately here or end up going lower. We may not fill the gap at all. As I've said, S&P signals, trending signals turning bearish. Now, if you find this information useful, if you like my charts, if you like my indicators, take a moment and support the channel. If you can partner with me, I'd really appreciate that. Most YouTube channels get sponsors and sell you a bunch of junk you don't need, send you to a bunch of websites, want to overcharge you for things. I don't want to do all that. I don't want to sell you anything. Just put it out there, all of it, and just ask that you do what you can to help out. If you could just step up to the plate and take a moment to help out, it would be very encouraging to hear from you. Just follow the link below to take you to a secured site, and you can donate any amount you want or make it a recurring donation. If you do that, I thank you. I thank you for your consideration for that. Again, we're just seeing my trending signals all begin to turn bearish, again, validating the topping tail in the weekly time frame for NASDAQ and S&P. S&P here. Don't have a red bar yet here for, or red cloud for the NASDAQ, but do have 3 days worth of warning bars that is likely coming. Many of my trending signals turning back to bearish. So again, the majority of the trending signals are now validating the topping tail, even if we attempt a recovery. Don't confirm this candlestick by the end of the week and you get a hanging man or something like that if you try to fill the gaps. I told you going into this week to be looking for a lower high and confirmation either this week or next week. I thought it would be this week, but again, like I said, we could get back-to-back reversal bars with either a lower high or a higher high. My guess is that we've peaked. We're not going to get the higher high, and those signals turning back to bearish, I think the odds greatly increase that we've peaked at major resistance. NASDAQ also got the topping tail. Here we had the gravestone doji. We got the divergences going on in the weekly time frame, like on the RSI up here. NASDAQ's down for the week so far, 728 points so far, 2.82%, nearly 3%. Again, do we confirm it by the end of the week, or do we get back-to-back reversal bars? We'll be watching to see, do we attempt a recovery or not? But signals for the NASDAQ are now validating the topping tail, the shooting star candlestick that I talked about. And again, either this week or next week, we should see a close below this level, a lower high. We peaked with the Fed. I called a top for the NASDAQ and the S&P the same day with the Fed day. I think that those highs are going to hold, as I said. I told you if I was wrong about that, we would get back-to-back reversal bars in all likelihood, slamming up into resistance. I told you I didn't think it would play out that way, but I always tell you what I think, and then if I'm wrong, what could happen. Stack weekly chart here. Again, eventually we need to take out these 10-week moving averages. Again, we got those topping signals with the Fed. Resistance. We got those topping tails. We got the S&P slamming into resistance on Tuesday, gapped a little higher, and with the Fed, we had a gap and trap, and we moved just slightly above the trend line. And I told you, turn off of that trend line. I'm playing that trend line of resistance on Tuesday and Wednesday from last week. As I said, I had tried a short with the October 9th reversal there, play out, and stops were triggered on the 24th. Went up to that trend line of resistance, and we got this divergence. Intraday charts, and that's played out. We're finding resistance at the 200. These gaps, we'll see if we eventually try to fill them. I'll show you on the 60-minute chart. If a divergence develops here in the 5-minute and 15-minute time frame, get a follow through to today's sell signals on the trend signal indicators, still go lower before we get any kind of rebound. At some point, we'll get a rebound, but we still may go lower first. 15-minute chart. Gap fills up here at the 200. We may not fill these gaps. We don't have to, but we could. We're taking out the 200 period here. Again, I told you at the top, we're going down to 65.50 down here at this low right here, and you've got the potential head and shoulders. Again, we still may just head on down there or move closer to it and then get some kind of rebound to the right shoulder, fill these gaps at a later date. We might try to fill the gaps or one or two of them immediately. We did have a gap lower today, and then we filled it on an intraday basis with today's bar. A little hard to see right there, but we did fill that on an intraday basis. We still may do it on a closing basis, 67.96. The gaps up here, again, have to be filled, or they may be filled at a later date. I think you're setting up a head and shoulders pattern here and a larger one in the daily time frame. I think you've got a smaller one here, from October on into November here. And I think we're headed to 65.50. Any rally back up is a gift to the bears and an opportunity for an exit point for the longs, because we've likely started the bear market. Watching, do these gaps attempt to get filled, get some kind of rebound on that weekly bar on the S&P 500 weekly chart. You don't have to, but you could. Crash is now in progress based on confirmation of the topping tail in the weekly time frame with those trending signals in the daily time frame. That was a smaller head and shoulders on the 60-minute chart. Here's a larger one from the April low. And again, you're going to take out the 50 soon, and the cloud here, the trending cloud, and you're going to eventually make your way back down, dropping 26 to 30%, dropping down into January in all likelihood down to the 48.35 area or just above it, the rising channel. You're going to drop 26 to 30%. You could drop more, but you're going to get a bigger crash than what we had over here to kick off the bear market, begin to price in the recession, and as we begin to seeing warning signs, banking crisis. Now, again, it's going to be other things. You got this government shutdown. I told you it was going to be the biggest government shutdown in history. It now is. I told you it would likely go about 5 to 8 weeks. I believe that we're in week 5 here. I think they're going to let it go on longer. If we start seeing things happen, the government shutdown is being done on purpose to try to put the economy into recession going into the midterm elections. They're going to be successful in doing it. So there's a combination of things going on. Bursting of the AI bubble, getting signs of the banking crisis, government shutdown. There could be concerns about the economy weakening. And eventually, when the government reopens, we're going to get these reports. The jobs report, inflation data. And I think you're going to see the inflation data begin to rise. We did get the CPI because they needed it for the adjustment, the COLA for Social Security. You're going to see these jobs reports come out. We're behind 2 of them now. See negative numbers. What was associated with the top back in 2007. Massive head and shoulders. The Fed's going to cut here, and you're going to get this massive rally back up. Everybody will proclaim it's over. The people that are telling us it's never going to happen. You're going to see a head and shoulders set up here in the S&P in all likelihood. Massive rally by January, I think, into the first quarter, probably early into the second quarter there, and then you're going to see these levels, whatever low we put in here, whether here at the April low or beyond that or just above it, you're going to see those levels taken out. Massive collapse in the stock market and Bitcoin. Quickly, I warned you about this trend line up here. That's where I've taken my latest short position. We're now breaking the rising wedge trend line from the April low. And you're either coming back to this trend line or horizontal support or maybe beyond it. Going to get a bigger sell-off than the 27.5, the 21% that we had, 21% sell-off we had over here. You're going to get a bigger sell-off. I'll get it yet. There it is. Red and black so you can see it there. This is why I called a top on the 29th and why I told you I think that we've peaked channel from the 2020 low. Some of the support levels that I'm looking at, again, we broke the trend line today from the April low. So that, again, is confirmation of the topping tail in the weekly time frame. You got to take out the 50 period. I think you're forming a head and shoulders top right here. I think you're going to come down here and bounce so you get some kind of rebound back up. And then I think you're coming down to the April low. I think you're going to break through these support levels, take out the 200 period, eventually come down and rally back up towards the 250 as we get a death cross. Bitcoin's about to get a death cross. Over the weekend, we were at 50 on the bullish percentage index. If we break it, it's going to validate a sell-off. And again, that's what we saw on Monday. That's what we saw back over here in February. When we saw the sell-off in February down to the April low, we saw the bullish percentage index move in the negative region and remain there. Further confirmation that we've topped. The bear market is starting. The selling can continue now that we've broken this trend line right here. Again, be watching that 50 period moving average, be watching the horizontal support for the head and shoulders. We'll see if we get a sharp push down and just, start selling off, or do we form that head and shoulders, or do we attempt to bounce and maybe try to fill those gaps? We'll be watching to see a couple different ways it can unfold, but it is being validated along with like the MACD rolling over here, these divergences that we've talked about to get a very, very ugly sell-off. At some point, you'll see a bounce. We may just go a whole lot lower before we get any kind of meaningful bounce if we don't attempt to fill those gaps. Watching to see if we do or not. Huge warning sign that Russell did not make new highs when the S&P did. We're seeing the Russell break down from its rising wedge ahead of the S&P. Now the S&P broke the trend line today. It's trying to bounce off the 50 and then now it's failed. So again, the Russell, massive warning sign. Russell turned off its upper channel line right here. This is the IWM ETF for the Russell. Again, parallel boundary to the lower boundary. So again, some huge warning signs. Russell diverging with the S&P as the Dow and the transports have diverged. Massive divergence on the Dow. This is the 2022 channel. NASDAQ 100 down 1.91%, down nearly 2% today, around that 200 period, just under it. Again, do we make our way down to those October 10th lows? Head and shoulders pattern in play here. Got some gaps in play here we'll be watching. Had another one today. The smaller head and shoulders and the larger broadening formation, it could just continue lower down towards these October 10th lows before we get any kind of meaningful bounce and not fill the gaps. Be aware that that very well could be the case. NASDAQ breaking the trend line from the October or April low today as well, along with the S&P 500 again. Rising wedge. Diversions playing out on the RSI there, taking out the 20-period moving average. Massive broadening formation in the daily time frame. I warned you the NASDAQ was hitting that upper channel with the S&P. NASDAQ just slightly overthrew that level. It did with the upper boundary, the broadening formation. Nvidia did the same thing. But again, you're likely coming down to this low right here, or maybe even beyond it. Again, this is where I'm attempting my shorting position. Those peaks on the October 9th and then the 10th on NASDAQ 100. We moved to new highs, triggering stops. I told you if that happened, we'd likely see the peak with the Fed. And I think that that's exactly what has happened.